Greetings to all the participants of India-USA Trade Connect. A warm good morning to all our friends from USA and good evening to all our friends from India. As the chairman of IACC Tamil Nadu branch, it is indeed a privilege for me to welcome you all to the second day of this flagship event hosted by Indo-American Chamber of Commerce. Day one of this trade expo was a grand success, and we witnessed huge footfalls for the trade expo and also remarkable attendance for all the sector-specific seminars. The feedback that we've been receiving is quite encouraging, and we are happy to know that this event is turning out to be beneficial to all attendees. Like on day one, we have many companies from both countries who have set up virtual booths wherein they would be exhibiting their products and services. There are breakout rooms where participants could connect with a particular company and hold private discussions. As you have experienced yesterday, we have organized some very interesting seminars on important sectors on the second day as well. We have distinguished business leaders and industry stalwarts who would share their views and also provide important insights into each of these sectors. The keynote sessions on chosen sectors will begin shortly. Today, we start off with a session on long-term financing for Indian investments in the US. This will be followed by 3 sector-specific sessions, namely apparel and textiles, healthcare, pharma and medical devices, and technology for growth. We will finish today's proceedings with a valedictory session. All the sector-specific sessions will take place in the auditorium, which can be accessed from the landing page, which is the lobby. I hope all attendees and participants have a great experience with today's proceedings as well. We now move on to the first session, which is going to be hosted by Mr. Robert Monyak, EVP and Chief Lending Officer at World Business Capital Incorporated. Robert Monyak is an Executive Vice President and the Chief Lending Officer at World Business Capital. Monyak is responsible for managing WBC's lending, underwriting, and marketing activities in the US and internationally, with a special emphasis on transactions involving foreign investment into the US. He was previously the Senior VP at First International Bank, where he developed the bank's lending activities in West Africa and Russia. Mr. Monyak was previously Director of Programs for Eastern Europe and the New Independent States at the International Executive Service Corps, a provider of technical assistance in developing countries. He holds a BA degree from Duke University and a MA degree in political science from Columbia University. Over to you, Robert.
Thank you, Arun. And it's certainly it's a pleasure to be a part of this this conference and to have the opportunity to present to the participants. Thank you to the Indo-American Chamber of Commerce and to everybody involved and to all the participants. I'd like to speak to you about a few things this morning. And of course, I've got while I have a presentation that I'm going to go through, I'd like to leave some time for some interaction, for questions that may come up. And certainly, the World Business Capital, has a booth. We are exhibiting here at the event, so anybody's welcome to come by, and of course, reach out to us directly afterwards, or even in the days and weeks to come. So I'm going to do my best to share my screen here and just to guide me through this presentation. Okay, so it should be up there as long-term financing for Indian investments in the U.S. I'm going to talk a bit about just World Business Capital, and then about our involvement and our company and what we've done in India, and what we feel that we are offering in terms of innovative and useful programs financing for companies from India that are either have invested or are investing in the United States already. So let's see. So just about World Business Capital, we are as it says, specialized international lender. We're a commercial finance company and a direct lender. Although we're not a bank, we are a regulated financial institution. We're not a bank because we don't take retail deposits, but we have our other forms of financing. But we make loans. We hold those loans. So when we have we have an opportunity to provide financing, we underwrite that loan, we close that loan, and we service the loan. So the client remains with World Business Capital for the entire loan term. So I just always like to make that clear. We're not intermediaries or brokers or consultants. We are a direct lending institution. We offer long-term loans with flexible structures to help U.S. middle market companies compete globally, and also we work with foreign companies, as I mentioned, coming into the U.S. or who are here already. We have 23 people here, multilingual professionals, many years of experience in international corporate trade and project finance. I should also mention one of my colleagues who's participating certainly in today's event and is currently based in Mumbai is Rohit Chowdhury, who's been with us many years, and he goes back and forth between the United States and Mumbai, where he is from originally. So, let's talk a little bit about World Business Capital's focus on India, sort of how we've been able to become involved and provide financing both in India and to Indian-based companies. So we specialize in using U.S. government guarantee loans, government guarantee programs to make loans that can provide the best possible loan terms. And many of you will know of the Export-Import Bank and the Overseas Private Investment Corporation, which is now called the Development Finance Corp. So we work very closely with them. These are basically risk-sharing programs where we make loans, and World Business Capital makes loans and is able to have some of the risk shared by these government agencies. And we also work with the U.S. Department of Agriculture's Business and Industry Program. So that's sort of a key component of World Business Capital's business is this specialization in using loan guarantee programs. It's how a company like ours, based in Hartford, Connecticut, relatively small, has been able to do business around the world and have a very significant portfolio of loans under management. We've been doing business with Indian-based companies since 2003. India is currently our second largest international market with we've made 95 million in dispersed loans in India. Now, until recently, until a few years ago, our focus has been on lending in India to non-bank financial institutions. That's not really what I want to focus on today, but I want to just make sure I mention that, that's what's been where we've done a lot of business previously. Let's talk about just sort of our connection to India. In last year, World Business Capital's CEO, Brett Silvers, was asked to serve on the Department of Commerce, the U.S. Department of Commerce's Trade Finance Advisory Committee, where he is a member of the Supply Chain Finance Subcommittee. And he recently completed a 2-year appointment with the Department of Commerce as a representative to the U.S.-India CEO Forum. Again, this is just some background to just illustrate sort of World Business Capital's connection and experience with India. Turning a little bit to foreign direct investment in the U.S. from India. India's, as many of you know, Indian companies account for a whole lot of foreign direct investment in the U.S. It seems that 22 billion is the current amount of investment, and we see that as only growing. Maybe we look at graphs in terms of or trends. Maybe was a break because of COVID from mid 2019 to 20, but we certainly saw a lot of investment coming into the U.S. before that, and we expect that's only going to continue, if not increase, due to just events around the world. We think that sort of everything kind of works over time in the near term and the medium term for there being even more foreign direct investment coming into the US from India and other countries. And some of the top destinations in the US are Texas, New Jersey, New York, Florida, Massachusetts, and a whole range of sectors, of course, as I just noted a few. Auto components, pharmaceuticals, aerospace, engineering, food processing. So what we are able to offer, getting to sort of let's go to the meat of the presentation, the main portion. So what we're able to do for companies that are either in the United States already or coming into the US is that we can make loans up to $20 million for Indian companies to make and expand their direct investments into the US. These can be US operations, subsidiaries, and affiliates of established Indian companies, both expansion and greenfield. And I'll maybe talk a little bit about that in a minute. And investment projects can be a wide variety of industries. So as I say, we're not sector specific. And the repayment terms, and this is important, is up to 25 years, depending on the type of project and the type of collateral that's available. When I say startup companies, what I mean by that is if a company is starting up in the United States, but it's an established Indian company that's been in business for several years, that is something we can do. And I'll explain, meaning that is a kind of opportunity that we can pursue where we can offer financing. Where we would have a difficult time is if the entire operation is a startup, meaning there's no existing business in India and there's no existing business in the US. What I'm saying is that even if a company is new in the US, we can derive comfort if there's an existing business in India, and we can do some background and learn more about that. And that provides us, in terms of our credit underwriting, for, it's a sufficient offset to the fact that the company in the United States might be new. But that's different than if the entire business, actually I received an inquiry recently, not from India, but from somewhere in Europe, where there's no established business in Europe and there's no established business in the US, and they were asking if we can consider financing. And I said that would be difficult. So, but startup projects in the US would be fine. And of course, expansion projects are in the US that are foreign owned are certainly good opportunities for us to consider that company for financing. I mentioned just target sectors. And again, it's a wide range. We are particularly interested in food processing. That is, I would say, our largest, sort of our highest priority. But that's not to mean that we are not interested in these other sectors as well: manufacturing, distribution, logistics, transportation, packaging. We're looking at companies all the time in these other sectors. As I mentioned, the U.S. operation, this is just following on what I just said, or the Indian parent company should have an operating history of at least 3 years. But it says or. So if the U.S. operation is new, or if an Indian company is coming into the United States to make an acquisition or to start the business, that is perfectly eligible. Of course, proven track record of financial performance, either in the U.S. or in India, strong corporate governance and management are other highlights, for us in terms of determining other key points in terms of determining eligibility. So I mentioned up to $20 million, and I mentioned also just before about food processing and how that's our very high priority. If I just start maybe with the second point here, if it's a business that's involved in either processing, storing, distributing food products, the loan can be up to $20 million. And there are some specific reasons to it. I don't want to get into too much detail, and of course, when the time we have here. But again, it's just what it is. We can make loans up to $20 million if it's in food processing. If it's not in food processing, and the loan can be up to $10 million. And like I mentioned, the loan term is quite attractive. It could be up to 25 years. And the key is that it does not have to be a U.S. owned company. So we can have a company that is fully owned by either Indian nationals or an Indian company or an Indian fund, and that would certainly, if it's in the U.S., it can qualify. I do just a point here, just so I don't create any confusion. I did mention before that we had done, World Business Capital has done a lot of work with non-bank financial companies in India, NBFCs, And we still do some of that, but that's not the focus right now in terms of new business. But what we cannot do, and so I'm clear, we cannot finance, let's say, an Indian food processing company in India for its expansion in India. That's not something we are it's not a type of financing opportunity that we're pursuing at this moment. So we are talking about investments in the US. Again, startup business are eligible. And this is key. We only secure the assets. It's always a question that comes up to us. How are you? What security do we take? We take only the assets in the U.S. So whatever we're financing, whether it's building or land, equipment, that's what we're taking as collateral. We are not taking as collateral assets in India, and that is important because it means our loan does not create a conflict with the Indian parent or the Indian company's existing banking relationships. That's left completely separate. And I said another point is that we lend against the value, I said, of fixed assets. I mentioned building, improvements, land, equipment, and intangibles, but we leave accounts receivable and inventory. We leave that alone so that can be used to secure revolving lines of credit because we're offering a term loan. And we recognize that often a company or a new business in the US will need a line of credit. And that's not something we do directly. I'll speak about that in a few minutes. Lines of credit that's provided by other institutions, asset-based lenders or short-term lenders. But we're not taking an all asset pledge in our loan. So we're leaving accounts receivable and inventory available so that our borrowers can obtain lines of credit from other institutions. Once again, loans are secured by assets in the United States. It's possible that, and I mentioned, I mentioned earlier that we might look for comfort from the fact that there's an established business in India. And that involvement may be required to provide an unsecured guarantee, meaning a guarantee with no pledge of assets. It is possible, and I can give an example as we move a little forward as an unsecured guarantor. What are some of the benefits of our financing? Why would companies turn to us as opposed to a local bank in the United States? Certainly, I mentioned the longer repayment terms, flexible use of loan proceeds. As I said, our loans can be used for new facilities, equipment, permanent working capital, and debt refinancing. Debt refinancing, that's meaning debt that has been used previously for the U.S. business. We have attractive pricing. I'm not in, once we start talking about specific deals, I can provide more specific information about pricing. But let me just say it is certainly similar to what can be obtained from a commercial bank. And I mentioned before, we do not compete with, or we do not have any conflict with an Indian parent's existing banking relationships. I should have said that's a mistake there. Sorry, that said it's the existing U.S. bank. We meant to say in existing home country bank relationships. Okay, then would also through our financing, it makes it possible for an Indian parent, again, Indian companies to obtain financing here in the U.S. so they don't have to use their domestic credit availability, meaning domestic and Indian credit. They don't have to use up their credit lines. They can get the financing entirely here in the U.S. I got one more slide on kind of financing. This is not what we offer, but it's certainly an important component of a company of what a company might need as they come into the U.S. and establish a business or expanding their business is short-term financing. As I said, we do not provide that directly, but we do work in close partnership with asset-based lenders who do. So somebody coming to us, and we had this recently, says, okay, we have a need for $8 million for a term loan, but we also need a $10 million revolving facility. Can you provide that? We cannot, but we can certainly make a qualified referral to at least, let's say 2 to 3 very, credible sources of short-term working capital who we've done deals with before. Again, we're not related through common ownership, or there's no official connection, but it's just we've developed this in our time in working in the market. We've developed these relationships. And we recognize that it's very often we have this situation where a borrower needs short-term financing. as well, in addition to term financing, and we want to be able to provide those qualified referrals. Asset-based lenders can be divisions within a commercial bank, or they can be independent specialty lenders. As I mentioned before, they are typically secured by accounts receivable and inventory. And I said, give them, I just here note here some typical advance rates, 50 to 70% against inventory, 80% against receivables. It depends on the industry, it depends on the type of receivables, the type of inventory, but that's what's usually available here in the US. And it's very common for us to be doing deals where a borrower is closing simultaneously with us, with World Business Capital and with the asset-based lender. So that is a common situation. I have a couple of closings actually in the next few weeks where this is the case. We are closing and there's an outside short-term lender. So, come to us, say you need short-term working capital in addition to long-term financing, and we can provide referrals to companies that will at least, we can be sure they're going to consider the request. I'll just make another statement here. We have some situations where companies come and they only need short-term working capital. We'll still make the referral. So for us, it's not a quid pro quo, or I should say, it's not a requirement that you work with us in order for us to make referrals. We have these long-standing commercial connections and relationships, and we're happy to share that for companies that at this time may only need short-term working capital, but we know that they're going to need term financing down the road, and we're going to be hopefully the ones they come to. Asset-based lenders in the United States are important in that they provide financing to early-stage companies, provided they can offer sufficient security, and I mentioned inventory and receivables. But asset-based lenders as well, like as I mentioned, like us, they don't need for a company to have been in business for many years, as long as they have the assets to pledge a security. And I'm just a point here just to repeat, we're only lending against the value of fixed assets and intangibles, so inventory and accounts receivable are available for the lines of credit. Let me just now offer some case studies, and then I'll be finished. I've got 2 or 3 more slides, and just so that we can talk, see if there's any questions. So this is a good illustration of our experience and a success story with a company in India. This was a food processing company founded in 1995. Manufacturing distributor of ready-to-serve Indian food. It's been sold in the United States, Canada, and Australia. They were based, or at least the shareholders were based here in Connecticut. We made 3 loans to them, totaling $12 million. And we financed improvements and new equipment for a production facility in India. This was a time where we could do both, where we could finance production in India and in the US at the same time. As I mentioned before, right now our focus is only on the US assets, but it's a good example because, again, through our financing, they were able to then attract private equity for $8.5 million. You could see their revenues grew very significantly, and the company was sold to Mars Foods for $173 million. So it's quite it's an important success story for us, and where we were with the company early on, and we saw them through until they exited through a strategic sale. Let me just give 2 examples of what I was focused on earlier, sort of the investment into the US. It doesn't involve Indian companies, but certainly these are relevant examples because they give you a good picture of what it is that we can do. The name of this company is called Enox Market. They're in Muncie, Indiana, and they are a US operations of an Italian company, and they make stainless steel. So, everything that I've been saying about what we can do for supporting investments from India into the US, we can certainly do that with Italian companies or German companies or French companies. So it's not just with Indian companies, but certainly because as I mentioned before, we see all of this trade for this investment flow, and because of our experience, India is one of the markets where we are focusing on this. But we did this, we came across this opportunity with this Italian company. They were building a new facility, 130,000 square feet. The company makes a stainless steel that's used in the manufacture of household and industrial appliances. And here's a case which, as I go back to what I was saying before, it was a startup operation in the US, but the Italian company has been in business for 70 years. Now, it would have been very difficult for this company to get financing from a bank in the United States because it was a new operation. We, as an international lender and a company, World Business Capital, we are comfortable doing credit analysis and diligence on foreign companies. We could see that the Italian parent, was well established and a company that was likely to support their U.S. operations for a long time. We did require an unsecured guarantee from the Italian company. But all of the assets that we're taking on this deal, all of them are in the U.S. So this gives, again, an illustration of what I was saying before. I should also just mention Select USA, which is a U.S. Government program that is part of the Department of Commerce. And I don't know if they are participating in this event, for this two-day event, but certainly I know that they have an office at the U.S. Embassy or U.S. consulates in India, and they work to sort of help foreign companies, in this case Indian companies, find the appropriate sort of location or place to sort of set up an operation in the U.S. and sort of facilitate investment into the U.S. So I know that Enox worked from Italy, worked with Select USA to find this place in Indiana, Muncie, Indiana, where they set up operations. So that's it, I think. Yes, let me just stop there. And I guess that there's some contact information for myself and my team. I mentioned Rohit Chowdhury, and also George Thompson is our other colleague on the international team. And again, we focus on these investments into the U.S. Let me stop there and see if there are any questions. I'm not quite sure how this will work, but I'm hopefully the organizers can tell me how we do that. But that's open for questions at this point.
Thank you, Robert, and that was an excellent presentation with a whole lot of useful information, and I'm sure it's going to benefit most of our participants in today's event. And I'm going to be very candid in saying that I'm sure that most of the Indian companies or entrepreneurs who have intention of setting up operations in the US are definitely going to benefit by the details that you have provided to them. And I see that there is one question which popped up in the chat box, which somebody was asking about the cost of finance. Will it differ from sector to sector, or you have a specific thing based on the tenure, or you can just throw some light on it at a high level?
Yes, it does not vary sector to sector. Okay, and I would say that our pricing, it does not. We offer general sort of the same range. I mean, there might be other factors in terms of what we view as the credit risk of the entity, but sector by sector, it does not. I should add. I'm sorry, I should add something. If it's food processing, I keep mentioning about food processing being the highest sort of priority. We can offer actually a slightly lower rate, and that's just terms of our funding partners and our arrangement with other entities that we cooperate with. So we can offer a little lower on food processing. But in general, our cost of our financing is going to be, it's not mezzanine, it's with senior secured debt. So it's senior secured debt. It's not mezzanine financing. There's no interference with equity. There's no board seats. There's nothing where we say we need to have royalties or payment in kind. It is it's just senior secured debt. We are slightly above what a U.S. company may be able to obtain from a U.S. bank, but as I said, there's a lot more benefits that we're providing to a company coming into the U.S. than the U.S. bank can provide. So we're not, like I said, we're not a commercial bank, but we're not far at all from what can be obtained, what a U.S. bank is going to offer for the same general type of financing. And as I mentioned, our term is likely is much higher. than what can be offered by a U.S. bank. But pricing wise, as I said, doesn't vary. We're not mezzanine financing, we're not specialty financing, but we're not a big money center commercial bank like a Wells Fargo or something like that. So
yeah, sure. Yeah, that definitely gives us some idea about that particular question which popped up. And there's one more question that we see is, so did you mention that you have a resident representative in India, Rohit, based out of Mumbai?
Yeah, Rohit Chaudhary he's kind of splits time between Mumbai and Hartford. He's present in Mumbai right now. He's been for a few months as well. He's been there for a few months, and eventually we'll come back some point in this year into the U.S. for some time. But yeah, we do have somebody again from India. He's kind of, as I call, perfectly bicultural, bilingual, and English being, of course, it's
okay, great.
Language. But yes, but Rohit Chaudhary is on our team, on my team, and is part of the available locally. Again, one of the biggest advantages of that is time difference. So especially now we're a little closer, 9.5 hours, but when there's 10.5 hours, sometimes it's difficult to arrange time to be able to speak together with our clients and colleagues in India.
Okay, good. So I'm sure we're going to be having a lot more inquiries coming to the IACC offices, and the IACC Secretariat, Sujata and team would be more than happy to connect them with you directly. So once again, on behalf of IACC, thank you very much, Rob. I mean, it was indeed a very useful session, and I'm sure that all the participants are going to benefit from whatever you have presented. And thank you for being with us, and thank you for supporting.
Thank you for giving me the opportunity. I appreciate that.
Thank you.